So Mark, FedWatch, we know that we're talking about interest rates and the likelihood that the Fed is going to cut. Now it's been about 80 or 90%, but you just told me something interesting. So what is going on with the FedWatch right now?
Should we maybe tell them what we're talking about first?
I think probably so, yeah.
Maybe for definition, for the people that don't sit around and watch the mortgage market every day, all day.
Like you do.
It's like, yeah, I mean, people that have a life, right? So FedWatch, what we're talking about is the Chicago Mercantile Exchange.
Okay.
And they watch different markets, not just the Federal Reserve, but they have developed what's become really important lately, a FedWatch probability chart.
Okay.
And so over the years. And everybody's kind of watching that, or a lot of people are watching that saying, hey, what's the probability that they're going to cut rates at the next meeting? What's the probability they'll cut at the next, and so on and so forth? Or are they going to keep it the same? And so we've been operating in kind of an assumption that the Federal Reserve, when they announce on the 17th, is going to drop interest rates 0.25%.
Yep.
And we've known that for a while. And as a result, if you haven't noticed, interest rates have gone down. The national average, is something like 6.25, 6.3, somewhere in that neighborhood right now for a 30-year conventional mortgage. And FHA is below 6%.
Okay.
So, in general. And so, and that's kind of a range. It's a national average. So certainly you'll see cheaper out there. But I did see something in the low fives today. So,
wow, no kidding.
Yeah.
Just putting that out there.
So just putting that out there. But what's happening is the mortgage-backed securities market is moving ahead of the Fed. Like the investors are already assuming that's going to happen. And, the mortgage spreads that we talked about last time, they are actually getting smaller and tighter. And so that's bringing rates down.
Okay.
So and that's something we've been watching for a while. So back to the FedWatch thing. So this probability chart, we were a few weeks ago looking at it, and it said maybe a 90% chance that it would drop 0.25, and about something like a 10% chance that they wouldn't drop at all.
They would just hold at the current rate.
They're just going to hold until the 17th, and we're not going to have anything. And so just so you know, in general, what happens when the Fed does what we think they're going to do, or what we think they're going to make happen. So if they drop 0.25, basically nothing else happens in interest rates for mortgages.
Yeah.
Because that's what we expected, right?
And that's kind of priced in.
And in fact, a lot of the trading has already happened. And so sometimes what they see is there's not enough investors left when they make the announcement to actually trade any mortgage-backed securities that day. So they have illiquidity, which of course means they have to raise the yield, which makes the rate go up a little bit.
No kidding.
So just an interesting, fun fact, sometimes that happens.
We could have a situation where they cut rates 0.25 point as far as the federal funds rate is concerned, and then mortgage rates actually go up ever so slightly.
I mean, let's say that it's 6.3 right now. It might be the average would be 6.4 or something like that, or 6.35, or it's not a huge jump.
Well, what was interesting to me is that, over the last couple of months, it's been a very high likelihood that the Federal Reserve is going to cut rates in September. So, and it was, I think you showed us on the chart, it was as high as 93 or something percent.
Yep.
It fell back down to 70. People got a little worried that maybe they're going to hold, and now it's back up to 88. But it was 90% that they're going to cut 0.25 point and 10% that they're going to hold. But what you told me before we started recording is now at that 88%, we're at 88% that they're going to drop 0.25 point, but 11% that we're going to drop 0.5 point, right? So it's not about whether or not we're dropping. It's almost about how much. And if that 11% actually comes true and we lower 0.5 point, we could see some pretty crazy things in the market.
I mean, there's a lot of people that trade on 10% chance, 11% chance, or even less than that. I mean, hey, there was a Powerball ticket sold in Fredericksburg, Texas over the weekend.
Did you buy it?
Yeah. I was in Fredericksburg, Texas over the weekend, and apparently I wasn't buying lottery tickets. Sorry.
Well, you're here doing the podcast, so I doubt you won. So
it might be a different subject, like that work thing. No.
I don't see a gold chain or anything.
Exactly. I didn't roll up in a new Porsche or something. I don't know. But what's the chance you're going to win the Powerball, and how many people bought that, right?
Exactly,
maybe not the best example, but the truth is
Way
is
less
that
than
people do.
11%. Yeah.
Yeah, so it's 11.8% or something like that. And that'll change tomorrow. Who knows? Different economic news will make it move a little bit. But as we always say, it's important not only what they do, but what they say. So that's going to be an important piece too, is when he starts that news conference, what does Chairman Powell say?
Yeah.
But yeah, you're right. Actually, there is a chance that they will drop a half a point. And then when we look at the next month's probabilities, we're seeing somewhere in the high 70% chance that they'll drop a quarter point. So now that's assuming they don't drop the half point, right?
Right.
This
right.
time. So if they drop a quarter point on the 17th, they drop, another quarter point in October, which is like the 29th, I think. I don't remember off the top of my head. And then we have another one in December. So that's 3 more meetings before the end of the year. And so there's also about a 70% chance of a quarter drop in December. So we could have 3 quarters by the end of the year.
Yeah.
No guarantees. Now, if we get to September and September they drop a half, great. That's probably good for rates. If they drop a quarter,
But either way,
burger.
we're probably going to get to a half by the end of October, one way or another. Whether it's half now and nothing in October, or a quarter now and a quarter in October.
Yeah. I mean, obviously, they're still watching the market. They're still watching the labor market, and the labor market's really making some moves. And as you notice, we talked about the labor statistics, and they didn't exactly
Or
go
the lack
well.
thereof, yeah.
I mean, and so everybody's sort of watching when job numbers came out last week, and sure enough, I mean they seemed more in line, I guess. I don't know, but they definitely showed that the job market is weakening. And further and further. So now, obviously, what we hope is that we don't, plunge the country into recession, and
Sure.
But there doesn't seem to be a chance of that. The stars aren't aligning for that.
What about the Trump-Powell dynamic? Do you think that has anything to do with this sort of ramp up, and now there's even a chance that we could get a half a point cut?
I'm gonna guess that there won't be as much kung fu fighting as we saw in that one
Like
meme.
the meme you said?
Yeah, exactly. But in actually, in fairness, that was about the building renovations, and that wasn't even about the Fed cuts. But point is, I mean, you'd got to think that it's going to be a little more friendly, a little easier.
Yeah.
Because I don't think they're ever going to be best friends, because they just fundamentally, they don't see eye to eye.
Yeah. Now, do you think so? So let's say Powell does go on a chopping spree between now and the end of the year. He cuts rates by half a point in September.
Now, to be clear, that's a chopping spree, not the shopping spree he went on building that building.
Right. Okay. A rate chopping
Just making
spree,
sure.
not a Trump Tower-esque reno of the Federal Reserve.
Right.
So he goes on a chopping spree and cuts a half a point in September, quarter in October, quarter in December. Mm-hmm. Do you his contract coming to an end? Is there any mending of the relationship that you think, or are we for sure we're going to have a new Fed chairman by next year? Guys, before we finish up the conversation today, there's one thing that Mark and I noticed that's super concerning. Most of you that watch our videos are actually not subscribed to the channel.
Why would you want to miss out on great conversation like this?
If you're getting value out of the conversations that Mark and I are having, a subscribe to the channel helps us tremendously. We are on the road to 1,000 subscribers, and we're getting closer every day. And guess what? If you don't like us, you can always change your mind later. Now back to the content.
I am pretty sure that Chairman Powell has zero interest in staying in that job, and I'm fairly certain Trump has zero interest in keeping him.
Yeah.
Although again, he did appoint him in the first place.
Right.
So
right.
That's the funny thing. But yeah. So I think that I think he's done. I think he's done. And I mean, it's been a tough time. It's been a rough season for him.
Yeah, it's not been an easy time to be the Fed chairman, I wouldn't say.
No, I don't think it's ever an easy time, but it's been more so this time. It's pretty clear they know, and they've all but admitted they moved too slow and they raised rates.
Yeah.
And now they're, they moved too slow, when they lower rates. That's another thing. And, I don't again think we're going to see the 4% mortgage rates out of this. That'd be awesome.
Yeah.
But, I mortgage rates always take the stairs down and the elevator up.
It's so true. I mean, you said that when these rates first started going up, and it felt like overnight we went from 2 to 6.
Right.
And now we're,
into 8.
And to 8. And now we're just holding, in the 6s.
Yeah.
what feels like forever. It truly is the stairs down.
Yeah, I mean, we have seen quite a drop. I mean, we were talking high sixes, not so long ago, heck, a month ago, or even a month and a half ago. And then, we kind of get into the 6.5 range. Now we're, coming down unconventional.
Are you seeing more mortgage applications right now?
No, because, but it's the timing.
Mm-hmm.
It's this past weekend wasn't, but the weekend before that was Labor Day.
Right, sure.
People on a vacation, they're not looking at houses.
Nobody's filling out mortgage loan applications on Labor Day weekend.
Yeah, let me go to grandma's house, but hey, before I go, let me fill out this mortgage application. Probably not.
Let me upload my W-2 and then head out for some turkey.
Exactly. Well, and the statistics are showing that you guys didn't have as many new listings either that week.
I mean, I was just listening to some numbers before I got here today. 2024 was the worst year for real estate agents, the market in general, for as far as homes sold since the 90s.
Yeah.
And 2025 looks like it's going to be 100,000 less homes than 2024 was.
Yeah.
It's tough. It's a tough time to be an agent.
It is a tough time to be an agent, tough time to be a loan officer. I mean, I'm glad that I am. I mean, I've had some great success over the years, and I've been very grateful for that. But I've also, it's kind of about a story.
Yeah.
There's a bunch of numbers involved and underwriting guidelines and all of that other good stuff. But finding the solution for somebody who just really wants a home for their family, that's why I do it.
Definitely. I think that's a perfect place to leave it.
Sounds good.